Welcome back. I hope you're having a fantastic day. We're going to take a quick look at Bitcoin and see how things are setting up for the big day on Monday when the Federal Reserve meets in their emergency meeting to decide to do whatever it is they're going to do. The other thing we obviously have on the horizon is the Russia-Ukraine situation, and it's all over the news everywhere, wherever you get your news. This is Reuters. Biden and Putin talked this morning. Marcone and Putin have talked. So we shall see how this progresses. The word was yesterday, there was a lot of reports that Putin had made up his mind that he was going to invade. He instructed his commanders. So the intelligence community was talking about that. Russia is pulling their people out of their embassy. So is the United States, and the US is moving troops out of the area. So things are getting a little tense. We're just going to have to wait and see. Hopefully this is just political posturing like we were talking about yesterday, and we can avoid major conflict. So I know that's what everybody's hoping for all around the world, no matter where you are in the world, from Russia, from Ukraine. I received a lot of messages yesterday that obviously the people of those countries don't want this. This is a political thing. So hopefully they can avoid it, and it will be just a non-issue at the end of the day. But the big issue that we have is the Federal Reserve. That is real. That's happening Monday. The question is, what are they going to do, and how did it affect the markets previously the last time they did this, and how did it affect Bitcoin and cryptocurrency? But right now, a couple of things I'm looking at. This is Bitcoin on the daily, as Bitcoin continues to march along this fractal, working its way to a retracement. And given the headwinds with the Fed's meeting and global conflict on the horizon, Bitcoin has reversed course here, may do a little bit of a retrace back into the area we're looking at right here of 38,000 previous support. But what you'd really like to see right now, the bottom was set in at 35,000. There was a wick low to 33, but the close was 35. So that's your bottom. And we have a higher low and we have a lower high. So what we're looking for now is for this to roll over, set a higher low above this low, and then continue on from there, continuation from there. And then we'll see where Bitcoin goes from that point. We have our benchmarks that we're looking for, the 0.5 to the 618 for retracement. If we break the 618, we have the 702. If we break that, then Bitcoin may be trying to regain the previous all-time high of 69,000. So we'll just have to wait and see. One of the things I'm looking at, and the whole thesis of the bottoming was based on the death cross, where the green line is the 50, the white blue line is the 100, the red line is the 200. So the death cross is when the 50 crosses over the 200, 50-day moving average crosses over the 200 moving average. And we noticed that it happened the exact amount of days each time. So from the peak over here in April, the death cross, 50-200 death cross occurred about 67 days, 66, 67 days, depending on where you measure it, both times from both of these peaks. So what I'm looking at now, and I'll go ahead and get rid of that one so that we can look at what I'm looking at right now. We'll get rid of the 50, and we'll just look at the 100 and the 200 cross now. This isn't a death cross, but it is a moving average cross. So the last time that happened, we saw a little bit of a dip afterwards. And again, these are moving averages. So these are representative of previous average price action. So this is not an indication of what's going on right now. It's obviously 100-day and 200-day price action moving averages. But when this occurred, there was still just a little bit of a drop of about 10%, depending on when you actually measure that, over about a 7 to 10-day period, somewhere around there. Let's measure that. And again, it all depends on where you look at this from. So let's just take it from here over about 9 days, 8-9 days. So we have this cross occurring here where the 100 is crossing down over the 200 and Bitcoin is heading down. So this was about a 10% decline from the point of the cross. So if we take that on the last high to the low of about 10%, then it's going to put us about where I'm talking about. That would actually be in the $39,000 range for Bitcoin to continue down before it puts in a higher low around 38, 39,000. The higher low would have to be above 38 or 36.8. So around that 37, 38, 39,000 range, somewhere in there. Just depends on how this ends up, to put in that lower high and then continue on to a potential retracement from there. So anyway, it's just something I'm watching. These moving averages are interesting, and you can back check this. You can go back and look at where these crosses occurred in the past, where the 100 crosses over the 200, a little bit of downside, then it moved back up. That's the other thing. So it was a little bit of downside, then it moved into the retrace. So that's the key. This is what I'm looking for here, is this retrace move here. I'm looking for the exact same kind of thing over here. The question is it going to roll over and continue down into a longer consolidation, which is kind of the thinking of where we are in the cycle of this Bitcoin cycle we're in right now, within the range and the trend that we're watching. So if we go back and back check this, again, it crossed right here, price action dropped. This is the 2018 market. It went on a little bit longer of a downtrend before it came back up, but price was actually on the way up when that cross occurred, and then it spiked and went down into a longer, more bear market cycle. And then before that, you have the 2013, 2014 bull market peak, and it crossed over, bounced and crossed over again, a little bit different times back here in these two time periods. But that's just something I'm watching with the moving averages to see kind of how that shakes out. And then of course, the other thing that you want to keep an eye on is the trend. So again, you have the cycle, which is the overall bull market cycle going back to the previous peak to now. And then within that cycle, you're going to have ranges. And this is a range right here that we're in. This range right here initially of the previous all-time high down to the bottom. Now we're back in this range. And within the range, we have this trend that we're following of the downtrend that we're currently in right now. And you can draw the trend line of the wicks. Price broke out of the trend line. So a lot of times price likes to come back and test that trend line again. And then of course, there's other trend lines that you could draw, and price is going to, want to try to touch these trend lines. So if you draw the bottom cycle trend lines here like this, from the June, July bottom wick to our previous bottom wick, it brings in another trend line that could potentially be tested. And depending on how far out that goes will depend on what the price would be when it does retest that, if it does do that. So trend lines are interesting to follow and kind of watch along, as are the moving averages. So those are a few of the things that I look at when I'm trying to kind of predict. And again, this is all predictive analysis. You're trying to run with probabilities. What is it likely to do? What is the asset you're looking at? Could be a stock, could be crypto, could be Bitcoin. What is that asset likely to do based on previous behavior? Patterns often do repeat because again, these are algorithmic formulas a lot of times that are programmed in. If this, then that. If Ukraine is invaded, then that, generally a sell-off. If the Fed raises rates 0.25, this, if it raises 0.5, that, 25 basis points, 50 basis points. If it raises 100 basis points, don't expect that, but that would be a big one. So all of those things are put into the algorithm that then executes trades based on that, and then retail follows. So that's how that works. But let's take a look at this. So the last time that the Fed raised rates, let's take a look at what happened in the markets. So let's take a look at the Dow Jones. Let's go back to our chart here and do this. So let's take a look at the Dow Jones and see what happened there. And we'll put it on the daily. And if you go back to 2018 was the last time this occurred, when the Fed raised interest rates, and this affected everything. It affected stock markets, it affected crypto and Bitcoin, and it affected the housing market. So this was when they started talking about it, September, October of 2018. It was right here in this area where price started reacting to the Fed talking about raising rates. They actually raised it in December of 2018, and that's December right there. The overall decline in the market was about 19% on the Dow. NASDAQ, same thing. Here is 2018, 2019 in the NASDAQ, same thing. September, October, price started to react to the Fed talking about raising rates, and 23% in the NASDAQ. S&P, same thing. back in October, November. And again, the housing market did the same thing. It kind of stalled in October, November, December of 2018. It kind of like shut off like a faucet. It just went completely silent when the Fed raised rates, because interest rates affects the price of everything, including the price of money when you're investing in markets and you're borrowing money in the credit markets and things like that. And that was a 20% decline in the S&P. Let's take a look at Bitcoin. And what happened to Bitcoin, we all know. In December of, so this was October, November was back here. So Bitcoin and crypto kind of ignored that. But when the rate hike happened, December 18th, well, the rest is history. You know what happened in 2017, 2018. Here's the altcoin market right here. Same thing. Let's see when that occurred. Where is December? So December is, so the altcoin market was behind. So here's December right here. So the altcoin market actually went on a run, which it often does after Bitcoin topped and declined. The altcoin market can continue to run for a couple of weeks after that. So here is December 18th right here, in the altcoin market had a drop, had that initial drop, then it rebounded. And then that's when you had your alt season right there, where everything just went completely nuts. And then it was off into the bear market, which is what we're looking for now. Hopefully, if Bitcoin does retrace, altcoins should run. If Bitcoin retraces and kind of tops in this area like we're talking about, and does a little something like this and then maybe rolls over, the altcoin should retrace into this move and lag Bitcoin by a few weeks and continue to run back to all-time highs, especially the ones that have not hit all-time highs recently. The ones that have may not run. We don't know. We'll have to just wait and see how that plays out in this cycle right now. So that's kind of what I'm looking at and what I'm expecting. So let's look at the markets now in terms of Fed speak. So talk of raising interest rates started right here, October, November. So we are in February. Okay, yeah. So October, November, and recently here, last few weeks in December, the Fed is talking about raising rates. Their last couple of meetings. So here's November when they started talking. Boom, had a big drop in the Dow of about 6%, but it really started right here where the Fed's really talking about January, where they really were talking about raising rates. So this is where the action is happening. Initial drop of about 10%, but you can see this little area here, the same thing that happened in 2018, had a little drop in preparation for the rate hike. When the Fed actually announced, then it bounced a couple times, and then on the announcement, it dropped again. So if Monday happens and we follow what happened in 2018, then you could see a drop. Well, let's look at the overall. So from the peak, you could see a drop, we said around 20%. So that's where 20% is, puts the Dow at $29,000, which would make a lot of sense because it puts it back on track with where it was right before. And let's look at this right here. You can see this kind of how the market was steadily going up. Even with QE, it was still a steady pace, but after March 2020, it went kind of parabolic. You can kind of see it better on the weekly, how the Dow leading up to March, well, this is 2008-9 right here, but this is where QE started in 2008-9. It started to go a little bit more steeper from a steady incline to a much steeper. And then after March 2020, it went straight up. So what we're getting back to, if the market were to drop back, it puts you back, if it dropped 20% based on the Fed raising rates, this is the Dow Jones we're looking at, about 20% puts it right back where it was before March 2020, which was a steady incline, which is arguably where price should potentially be if you take QE out of the equation, maybe a little bit higher if you go 10% a year. Then, the last couple of years since March 2020, we should be about 15% higher than this point right here. So ideally, the market would, in normal conditions, be around right there, 33,000, somewhere around there. So this could potentially pull back into that area based on the Fed's actions, just like it did last time. Let's look at the NASDAQ. So the NASDAQ has already started its downward trend, a little bit more severe than the other markets. So what's 23%? So that puts NASDAQ right around 12,900. And again, where's March 2020? So that's well above March 2020. because the NASDAQ has just been on fire ever since March of 2020. So dropping 22, 23% is still a good little bump ahead of where it was before March of 2020. NASDAQ was 97.65 back in February, March of 2020 before the run afterwards. So that's why you're seeing a lot more damage being done in the NASDAQ, because it's just been straight parabolic, straight uphill in the tech sector, serious valuations. And so is the S&P. So the S&P is up there as well. If this dropped 20%, then the S&P would be around 3,800, which is still well above where it was at its point before the March 2020 drop. So that's just a little bit of a look at what happened to the markets back in 2018 when the Fed raised rates, and what you could potentially see, what that could do to the markets based on what it did in the past. And again, that was the peak. That was the top of the crypto market when that happened. So, I'm not saying that's what's happening here or that it's going to happen. There's just so much uncertainty out there right now. Kind of all your technical analysis, fundamental analysis is just kind of out the window. We know the fundamentals of the space are strong, as we've been discussing in the previous videos. There's more and more companies coming into the space, more and more institutional investors coming into the space, or at least setting up everything they need to do, getting their compliance in order so that they can enter the space and take part in the space. And we know they're coming, and we know it's going to be long term. But they're not here yet. End of the year, Q1 next year, we got to get through these uncertain times. They're certainly not going to enter right now with the Fed pulling out and with, geopolitical risk and climate that we are facing right now. Not like climate, but, the geopolitical climate of conflict and things like that around the world. So these larger institutions and investors are going to wait for that to circulate its way through the markets to see where price lands before they enter, because they're going to want to get the best entry they can possibly get. So that's what we're looking at. That's what you're facing. And it is Super Bowl weekend. I think we've had the pump into the Super Bowl based on some news of crypto projects and exchanges advertising during the Super Bowl. I think we've seen that pump leading up to it. Might see a little bit of a dump afterwards by the rumor sell the news, kind of like we did in the past with the Dogecoin Saturday Night Live thing. So that's what I'm looking at. Those are the things that I'm seeing. I hope you have a fantastic weekend. I will see you on the next video.